Hi everybody, this is Lara with your weekly video for Bitcoin with the trading week beginning 31st of January 2022. I'm recording this week from Buddy Charter. It's a historic little town built in 1705 in Oddwoods in northern Colombia, high up in the Andes, about 1600 metres above sea level. A little bit warmer than Bogota, so I'm nicely recovering from my very mild bout of COVID. Great. Okay, it looks like Bitcoin may have found a sustainable low. I'm going to use a channel on the daily chart for confidence and a price point for confidence in this low. At this stage though, there is some technical evidence on both the daily and weekly chart that there could be a low in place, and the pullback was an 89% correction of the prior upward wave, which is within normal range for Bitcoin. So let's look at Elliott Wave analysis first, classic analysis last. It looks like there may be a sustainable low and Bitcoin may be in its next run up to new all-time highs. If this wave count is correct, then the next movement up for Bitcoin is a third wave at minor and intermediate and primary degree. My targets for the bullish moves for Bitcoins are highly provisional. I'm really only putting them here to give us something to aim for, but I would much rather use classic technical analysis methods to identify highs in place, like I did in December 2017. Back in December 2017, I was analysing Bitcoin on a daily basis. It blew away all my targets. I ended up not using any targets for the final move, and I identified that high 6 days after it happened. I want to try and do that again for the end of primary 3 and possibly cycle 3. My wave count for Bitcoin is extremely bullish, but within this bullish movement there will be deep pullbacks and shorter-lived bear markets along the way. My wave count for Bitcoin has a first wave in December 2017 off to the left of the chart, followed by a deep second wave correction. Cycle 2 was an 84 or a 0.84 length of cycle wave 1. Where 2 ends, 3 begins. Cycle 3 may only subdivide as an impulse, and at primary degree that will be labelled primary 1, 2, 3, 4, 5. I don't want to label primary wave 3 over here because it hasn't moved far enough above the end of cycle wave 1 for the middle of cycle wave 3 to have passed. And so I expect that cycle wave 3 only has primary 1 and 2, and primary 3 is extending with intermediate 1 and 2 and now minor 1 and 2. This is not the only wave count, but in my judgment, based on Bitcoin's price history, this has the best probability. I do have alternates, and this is an exercise in probability, not certainty, especially for Bitcoin. We have to be flexible and consider other possibilities. If intermediate 1 and 2 and minor 1 and 2 are over here, then a third wave at 3 degrees may be in its very early stages. What that means in terms of price behaviour is that this Elliott Wave count expects a strong increase in upward momentum in coming weeks and months, and it should have support from rising volume. If minor wave 2 continues any further, then it may not move beyond the start of 1 below 28,893.621. At the daily chart level, this high here for the end of minor 1, this point here, minor wave 2 could be a complete double zigzag, W, X, Y. The first zigzag in the double, labelled A, B, C, is labelled minute wave W. The double is joined by a 3 in the opposite direction labelled X, and the second zigzag may be complete, minuet A, B, C, to complete minute wave Y, ending within the normal range from 80 to 90% the length of minor wave 1. Minute wave X subdivides as a double zigzag. That's okay. It's minute waves W, Y, and if there is one Z, may themselves not subdivide as multiples. The rule I'm applying here is the maximum number of corrective structures in a multiple is 3, and that count of 3 applies to W, Y, and Z. So you can't label W, Y, and Z within them W, X, Y, X, Z. That violates the rule. It's the most commonly broken Elliott Wave rule you'll see in work online. However, that count of 3 obviously doesn't apply to X, otherwise the count would be 5. The only rule to apply for X is it must be a corrective structure, and here it fits as a double zigzag, which is a corrective structure. Draw this best fit channel around this downward movement. from the start of minor 2 to the end of minute x. Place a parallel copy. I've pulled it down here to contain as much of this downward movement as I can, except for this overshoot for minute wave y. It was nicely tested for resistance here, and it looks like it may be tested in a very few days, another 1 or 2 days. It could be tested this week again. If this trend line is breached by a full daily candlestick above and not touching the upper trend line, then I would have some reasonable confidence that we may have a sustainable low in place here. If we see a new high above this price point here, that would invalidate how I have the alternate labelled at this point, and then I would have a little bit more confidence, or some reasonable confidence at that stage, in this main Elliott wave count. At that point I would be expecting new all-time highs for Bitcoin and an increase in upward momentum. We're not quite there yet, though price does remain contained within this channel. At this point we do have multiple Elliott wave counts which remain valid. There's some technical evidence for this low, we'll get to that at the end of the video, but Bitcoin's lows are just really hard to identify. It's not conclusive. It just never is for the lows. It's a little bit easier for the highs, although none of this is easy. Okay, let's consider an alternate. From this low to this high, it really does look like there is a 5-wave impulse. 1, 2, 3, 4, 5. We could have only primary 1 within cycle 3 complete at this high. This is entirely possible. This wave count is bearish for the short to mid-term. It considers the possibility that price may continue lower. If we see a new low below this point and the main Elliott wave count is invalidated, then this would then become the main Elliott wave count. For now, it's an alternate. This wave count expects that we have a primary degree impulse over here and a primary degree correction for 2 to complete. The first target is for 2 to reach 0.618, the length of 1 at 28,249. That target's probably not low enough though. The more likely range would be for 2 to reach 80 to 90%, the length of 1, from 16,310.97 to 9751.14. That's the common range for Bitcoin's large degree second wave corrections to end in, looking at its price history. Primary 2 may not move beyond the start of primary 1 below 3191.3035. At the daily chart level, this is the alternate wave count. All the labelling is the same until we get to this point here. W, X and Y could be continuing lower, with A, B, C. B to find resistance at the upper edge of the channel, which is drawn in exactly the same way on both daily charts, and then C to move price lower to bring price down to within this range. Minor B may not move beyond the start of A above 51953.62. Alternatively, this is the same as the main wave count, but instead of seeing minor 1, I'm sorry, not the main wave count, this is the same as the alternate, but instead of seeing intermediate 4 and 5 over here, what if intermediate 4 is continuing sideways as a triangle? This is possible. 1, 2, 3, 4 to continue, and then 5 could complete just primary wave 1 within cycle 3. This is a very, very bullish wave count. For the short to mid-term though, it expects sideways movement in an ever decreasing range. Intermediate wave 4 may be either a running contracting or running barrier triangle, with A, B and C completed, and now D an upward swing to complete, and then E a downward swing to complete. If it's a contracting triangle, then D may not move beyond the end of B. If it's a barrier triangle, then D should end about the same level as B, so that the BD trend line looks essentially flat to the eye. What that means is this high here is not an absolute invalidation point, only a new high by a reasonable amount above this point, so that a BD trend line looks like it's got an upward slope, would then invalidate the triangle, because BD should be basically flat, or for a contracting triangle have a downward slope. I'll continue to publish this and consider it while it remains valid. When D is complete, then E would most likely fall short of the AC trend line. When the triangle is complete, then this wave count expects a shorter upward movement for intermediate 5 to complete primary wave 1. So there's more than one way, or there's multiple ways to label this developing upward movement, and it's really important from an Elliott Wave perspective to consider all those different possibilities so long as they have a reasonable look and as long as they remain valid. I'm then going to be using classic analysis in coming weeks and months to identify which is the most likely. Let's take a look at that now. At the weekly chart level, there's now a hammer candlestick pattern formed at this low, and it has a little bit of a push from volume. When we look inside the week, we can see at the low there was a push from volume for upward movement. So this supports the Elliott Wave count that sees a downward swing over here. Now this could support either the main Elliott Wave count or that second alternate that sees a swing within a triangle complete down here. On balance volume last week gave us a bearish signal. This week it's reaching resistance, but it's testing weak resistance. This is not particularly strong. If it tests this and moves down, then I may consider that second alternate wave count a little bit more likely, but for now this may assist to halt a rise in price. No signal this week. RSI is in neutral territory. There was quadruple bearish divergence at this high, along with a couple of bearish candlestick patterns. Unsurprisingly, we got this deep pullback. This bearishness totally could be resolved now by that downward movement. RSI is in neutral territory. There's plenty of room for a trend to develop. ADX still says there's a downward trend. The hammer candlestick pattern puts that in doubt though. ATR flat as price falls, and stochastics oversold. At the daily chart level, there's also a hammer candlestick pattern for this candlestick pattern, and it has a strong push from volume. The candlestick's closed green. It's an outside session. Let's assume, because it seems a fairly safe assumption, but I have to acknowledge it is an assumption, that the balance of volume in this session was most likely upward, considering the green close and the very bullish long lower wick. Upward movement within the session does look like it has push from volume. That's one of the things I was waiting to see to identify a more sustainable low, as it's come after RSI reached oversold and then exhibited some strong bullish divergence with this bullish candlestick pattern with support from volume. I'm going to suggest it's likely, not certain, but it looks more likely now that there may be a more sustainable low in place. The current session, if this closes green and has push from volume, would also support the bullish case. Look out for next resistance above, about 42,000. On balance volume broke below support, back above resistance, now in a weak range. No signal this week from on balance volume. ADX declining, no clear trend. Stochastics back in neutral territory, as is RSI and stochastics. ATR declining a little bit as price moves higher. And normally for a normal market that would be concerning for bulls, but for Bitcoin it does tend to have weakness around its lows. You have to look for 1 or 2 or 3 sessions with that strength off lows, and we see it here and we may be seeing it here. The lows for Bitcoin I have found are a lot harder to identify than highs. That's all from me this week with your Bitcoin analysis. I hope all our members had a most fabulous weekend.